Hey everybody, welcome to the Sustainability in Motion podcast, brought to you by ED4S. We focus on the fast-moving sustainability world to help the business community better understand the sustainability and environmental challenges we face. I'm Matt Orsog, Chief Content Officer at ED4S.
Hi everyone, this is Maria Maisterate, founder and CEO at ED4S.
We have as our guest today, Lorraine Wilson. She's founder of Blue Horizon and former CSO at Novata, where she helped build a leading sustainability data platform for private markets. She has experience at B of A Merrill, Just Capital, and Novata, and has deep ESG, investor engagement, and educational experience. She's also a board advisor to ED4S. Welcome to the podcast, Lorraine.
Thanks, Matt and Maria. Thrilled to be here today.
Good to have you.
Great to have you, Lorraine. So before we jump into the questions, I guess let me introduce you properly to our audience, because you really came on board just a few months ago. And the goal was to deepen our solutions around financial advisors' capabilities to speak about sustainable investing. So you've done a lot of hard lifting back at your jobs at Bank of America, for example. And so in the context where ED4S today is focusing on understanding exactly what are the skills gap, what are the missing tools, why is the confidence is not there? Because we keep on seeing in those surveys that there's a huge gap between the servicing of the sustainable investor, and about 80% of individuals surveyed in global, but also Canadian American surveys have appetite to talk to their financial advisors about sustainability. However, only 20% of advisors actually bring the topic up. And so, as some of you have been following ED4S work, last year we did a secret shopper mission where we talked with 40 financial advisors trying to evaluate their capabilities on this topic. This year, we're going one step deeper. So we're trying to map out the entire advisor process, from prospecting the client, knowing your client, KYC process, suitability, and then knowing the sustainable products and properly managing questions. So a few things going on our side for our listeners. We have the simulator-based training that will be soon launched for advisors to practice conversations with sustainability-focused clients, but also all kinds of other new emerging needs that the investors are showing. And we're currently writing a white paper together with Lorraine, which will focus on different tools and skills that advisors could acquire to make them better prepared for those conversations. So with that, I'll hand it off to Matt with the first question, but it's really great has been to collaborate with you, Lorraine, over the last few months on this project.
Thanks, Maria. That really helps set the scene. And yeah, we're talking about advisors and the challenges advisors face and how they can better serve their clients. So, Lorraine, I want to draw from your experience of your career at B of A, Just Capital, NYU, and understand, in your estimation from what you've seen, what common pitfalls do you see advisors encounter when discussing sustainability and sustainability products with their clients?
Sure. I appreciate the question, Matt. I mean, for me, it's not just professional. Given my time working at Bank of America, supporting 15,000 financial advisors across the country. It's also personal. So growing up and going to the branch office after school and listening in on some of those strategy conversations that advisors were having in the office. So I've got a few family members that have worked in this space. And I think that gives me unique perspective, both personally and professionally, in terms of where people get stuck in these conversations. And so, one of the things I really want to underscore, being that my time at Bank of America was so focused on due diligence and advisor education. Due diligence for sustainability requires a different lens. So we're not just talking about the financial performance of a fund, which is hard enough to track, depending on the type of fund. And, certainly we had a lot of programs around getting information out, but it's more about understanding the frameworks, the impact claims, the longer term risks of these products. One of the things, just drawing on that Bank of America Merrill experience, one of the things we did really right was to apply the same due diligence rigor to sustainability funds as we did to quote, traditional funds. So the labeling on two funds might be the same. I always joke about the water fund that my team and I spent a lot of time understanding two different water funds. The labeling might, frankly, be the same, but the underlying investments can be extremely different. And so that's where we spent a lot of our time, is trying to understand the strategy, trying to understand and look under the hood and understand what was in this fund. So are we investing in pure play companies or something else? So advisors, always want to do right by their clients, and they see obviously this growing interest in sustainability, but it's really having the tools to evaluate these products. What is a sustainable fund actually doing? And it's that transparency that then helps to instill trust. So those are a few of the things that I'll point out. And during my time at B of A, we were early on, but we were documenting a lot of the interest of these younger clients who wanted to move into the space from an investment perspective. And now we're seeing, those clients coming up the ranks in terms of being able to invest at scale.
That's great. So, Lorraine, we talked about the due diligence, and one of the topics that comes up a lot as a barrier to sustainable investing is greenwashing, of course. So I wanted to know a little bit more from your experience. What are different approaches or tools that are available out there to screen for greenwashing? How did you build this confidence for advisors to be able to recommend specific funds? And what should they look at when they're assessing basically the characteristics and the shade of green of different funds they're evaluating beyond the label, of course?
Sure. I mean, it's a major concern, Maria. No one wants to get caught greenwashing or, caught unaware. So I'd say clarity and consistency are key. Clients are increasingly informed. We all have access to information at our fingertips. They want their advisors to speak with confidence, to speak with integrity about what makes a product sustainable. So that really means going beyond those surface level labels that we were just talking about and being able to talk about how sustainability is integrated into the investment decision making. So, looking at the fund and describing what it's actually doing at the end of the day. That means advisors need training on identifying credible sources. These sources could be on their workstations, for example, but tapping into these credible sources and knowing how to use them. They also need to understand third-party standards, which is no easy feat. A lot of firms provide support here, but some don't. So, what is the information that's already out there in the ecosystem that they need to be understanding? And then recognizing when sustainability claims are more marketing. And so, the trust is built when an advisor can say, here's how this fund aligns with your values. And I know we'll talk about that, how to assess a client's values. So here's how this fund aligns, and here's where it may fall short. So those are just a few of the recommendations that I have to get a deeper understanding and really convey what the client is actually invested in.
Yeah, that's a good point. And from what we're seeing, some of the frequently asked questions when the investors are actually challenging the advisors on certain funds, it's the top holdings, right? Why do I see Amazon in my top 10 holdings in this climate-focused funds, right? So when you're talking about understanding the investment philosophy and what's the decision-making process by the portfolio manager, a lot of the time that could actually add clarity for the advisor to explain the holdings, right? So this could be a percentage of revenue coming from clean energy sources or patents or other criteria that they actually individually have selected, which certainly do not show up in a fund sheet or the fund label. So I know there's also regional specifics, like let's say in Canada, we have the Canadian Sustainable Investment Classification System, which helps a lot because it basically groups the funds based on their strategy. So there's already, a level of vetting and due diligence that's done. We know it's an impact fund. We know this is a thematic. We know this is ESG integration. I know there's quite a bit of solutions in the US as well and UK. So as you saw, I think it's one of the tools. So just wondering, as a follow-up question, Lorraine, are there any external tools that you would use or recommend outside of the workstation that advisors were using?
Yeah, and those are all great sources that you've talked about. And I completely agree. You might see a lot of overlap in the top holdings of some of these funds. And that's an exercise I've personally done, when working with advisors. And I'd say, for starters, don't apologize, right, for what you're seeing in the top holdings. You might have an overweight to companies that are more prone to disclosure. So when you look at these different rankings, sometimes it skews towards larger companies who are able to better disclose and then therefore perform better for ESG ranking. That's definitely the case. Aside from their machine, which might have a Bloomberg or Morningstar feed, other sources I like are places that I follow closely. So I think Just Capital does a really nice job of rounding out some of these issues, highlighting, and they're always forward looking in terms of the metrics that they're applying to these different publicly traded companies. So that's a North American perspective. Other groups across other asset classes that I think do a good job. The ESG Data Convergence Initiative, EDCI, just talking across asset classes. They do a really nice job of looking at different private markets, so private equity, private credit investors, and highlighting their progress on a set of metrics that these hundreds of investors have agreed to. So I use a lot of different sources and have found that it's important to take that into account. But generally, what's helped is the standardized sources. So looking to standardize metric frameworks and other programs like the International Sustainability Standards Board is another one I'd point to for both private and public companies.
This episode is brought to you by ED4S, the sustainability training solution designed for scalable workforce training. ED4S makes it easy to build, launch, and maintain time-efficient, role-specific sustainability training for your teams. Developed by industry experts and trusted by leading organizations worldwide, visit ed4s.org to download a free case study and see how ED4S can work for you.
Well, at ED4S here, we're all about educating sustainability professionals, including advisors. So, our next question we want to ask is, what do you see as the key knowledge gaps advisors currently face when trying to recommend sustainability-oriented products and strategies? Are there suggestions you can share from your time at Bank of America or other places that are kind of best practices, best tools that can help those advisors on how to fill those knowledge gaps?
Thanks, Matt. I see three areas. And by the way, these impact me as well. And so the three main gaps I'd point to are terminology, data interpretation, and client communication. So starting with the first, terminology. Many advisors are not fluent in this evolving language we've developed to describe these sustainability practices. There are terms like net zero, science-based targets, or just transition. These can feel very opaque. And I like to tell the story, beat up on my friends at Just Capital a little bit, just all in good fun. One of the first meetings I did in my role as the head of investor solutions there meant going back home to Merrill. So I went into Bank of America and I'm talking about this fund that we're so proud of at Just Capital. And I'm using terms like we're improving capitalism. We are talking about stakeholder capitalism. We are talking about an inclusive economy. And I got a lot of blank stares, Matt. And these are some of the smartest people I know, right? These folks on the front lines working with clients, really putting the best of Bank of America, Merrill's research out there, managing, billions of dollars. And I'm getting blank stares. And I walked away from that meeting and I said, I am really not connecting here. I mean, obviously everyone knows what capitalism is, but like, let's bring this down to a level where I'm using terms that client can relate to. So that terminology is such a difficult part of it. And I feel like we leave a lot of people out when we use the wrong terminology. And what is an advisor's, superpower? It's that storytelling, right? And so just bridging that gap and abandoning these really opaque terms and speaking in plain English, please. And one of the things we did so well at just to, close out that example is I survey people and get a good sense of what they were worried about. What are these kitchen table issues that are plaguing people across the country, across America? And we found there's just so much in common. But it's when you use that, plain language and speak to people in terms they can understand, workplace issues, their health, are they safe at work? Is a company dumping chemicals in their backyard? These are stories we can all relate to. So I start with terminology, but then after that, data interpretation, which for me, I love data analysis. It's the real way to understand how a company's doing. But many people aren't schooled in terms of how to interpret sustainability data, sustainability ratings, which we know can vary across providers. Which is why I'm a big fan of the standardization that we're seeing. But data interpretation can be very challenging. And even going back to that example we were talking about with the two funds that were both water funds, but invested in completely different things. So how do I compare those, right? So data interpretation. And then finally, you have to have a good sense of the terminology and the data to then convey what you're talking about to a client successfully. So these client conversations, it's one thing to understand a fund's emissions footprint. Great, we've got all this data out there. It's another to talk about how that aligns with a client's financial goals and their values. And I'm sure we'll talk about, assessing their financial goals and their values.
I just want to follow up on that language, reinforce really that language point, just plain language. It's so important. And it's really true in any line of work. You have your very, physicists have their very specific, strange language they speak, as do financial professionals, as do lawyers, and so on. And if you're in that world so much, you're throwing out this, terminology that just means nothing to normal people. And so especially for an advisor, I think it's so important to spend as much time as you can just, talking to those people instead of talking to the people who write those, 150-page, dense financial reports. Because, as someone who's married to a British woman, she tells me we're separated by a common language, and we argue over, whose English is real. I always lose because they had it first, I guess. But it's so important just to speak the same language as the people you're with. It builds trust. You understand them better. It's just I don't think you can emphasize that point enough. So I'm glad you talked about that.
Yeah. And I feel that's what advisors are really meant to do, right? What you just named, Lorraine, you touched on KYC. And part of the KYC is also like your soft skills. How are you adapting to a client? If the client has a high financial literacy, you're not going to have the same type of a conversation if they have low financial literacy. So this is something that advisors already do on day-to-day basis, just adapting conversations to their clients' levels, personalities, biases, etc. Then he talked about the KYP, the data, understanding the products, and then the suitability. So those are the three main issues. And it's just for an interesting story. We're working on a project right now where we had to prioritize for a 1-hour workshop for advisors. So where do we focus? What is the biggest pain point? Talking about the skills gap. So should we focus an hour on helping them develop their questions to start asking, engaging on clients' interests around sustainability? So should we focus on the KYC part and properly understanding clients' priorities when it comes to environmental, social governance topics, if there are any? So that was one piece. Is it more on the product side? Because technically, if you're not comfortable and you don't understand the investment products that you have on your shelf, you're not even going to talk about them because you just don't understand them. So you can't sell something that you don't understand. And then the suitability, right? You need to connect the two. And so it was clear from the beginning that we really need to solve for all of these three stages of the relationship or the experience of the process of the financial advisor. Otherwise, we're only targeting one. And we're not really solving the plumbing issue that we currently have from getting those assets under management, those portfolios that are available, all the way to the investors through the financial advisors. So on that, I would like to see from your perspective, Lorraine, when it comes to positioning yourself as a value-add, differentiated financial advisor, wealth advisor, how do you see the sustainability education or sustainability capabilities could actually help in business development and growth for advisors. And in the context of a current US market as well, be interesting to see your take on it.
Well, starting there, it's no secret that the news coverage of the sustainability space creates a lot of noise. And right there, I do feel for advisors because it's putting them on their back foot where, clients' first impression may not be a positive one, and advisors are having to engage on these topics. So, recognizing that is that they're not always starting on positive note. It might be a little bit defensive, just given the coverage. As a sustainability practitioner, I'm, still positive because now you can't tell me there's anyone out there who hasn't heard of sustainability, right? This, the coverage is highlighting it for people. And so I'm positive that advisors are at least having more of these engagements where they are talking to clients about sustainability. So how can they improve client conversation? So, once you've got someone in this type of conversation, I think that advisors who understand sustainability can move from being, say, product distributors. As you rightly mentioned, Maria, there are more of these fund labeling programs where funds are clearly identified as, having a sustainability focus. So moving from just being a product distributor, picking from these lists to trusted partners. And what I mean by that is that they can engage clients around their purpose, their objectives, and not just, the funds label. So being that the market today is so values driven, it's a big differentiator for an advisor who has a deeper understanding of this space. And as we've talked about, and as we're writing about, younger investors in particular want their portfolios to represent their priorities. So whether that's with regard to environmental practices at different companies or human rights, one that we haven't talked about as much in this conversation. So when advisors are equipped to guide those conversations knowledgeably and transparently, that then deepens the client relationship and it helps advisors stand out in what is a competitive field. And, as you alluded to earlier, it also helps conduct a better KYC or know your client process, unlocking valuable information around client preferences. So, it's all around a better experience in terms of getting more targeted with the recommendations and having better outcomes.
Yeah. And on the point of politicized situation currently in the US, and this is the research that you shared with me, actually, Lorraine, from Morgan Stanley's Institute for Sustainable Investing 2025 survey. I was actually surprised to see that in the US, the appetite is almost as high as in Europe and in Canada for sustainable investing. And also really interesting to find out that high wealth individuals even have a higher interest in sustainable investing. So those are interesting trends to watch and obviously part of positioning, right? In the world where robo-advisors can do a general risk tolerance, time horizon, kind of a target year fund allocation, how do we differentiate ourselves as financial advisors to bring additional value? And we're also in a world where back at the time we had philanthropy and donations on one side and we had like traditional investing on second. And now we actually can achieve positive impacts through our investing as well. And so there's certainly capital that wants to be allocated this way. And I hope we'll, with our solutions, at least try to solve for that plumbing issue. We're plumbers now at ED4S this year for financial, for sustainable investing funds.
All right, Lorraine, before we let you go, we usually, for fans of the podcast, you'll know this is kind of the time where we ask our guests if they had a magic wand kind of question. So, if you could suggest one immediate step, wealth management firms, if you had that magic wand and could suggest one thing wealth management firms should do to enhance their credibility on sustainability, what would that be?
Sure. Well, it's a good one. It's an important one. This seems like a huge, impossible problem to fix, but it's not, right? We know, Matt and Maria, that there are incremental steps that these firms can take to just get better. And I'd say start with internal alignment. That's what I would wave my magic wand and do. So, and these wealth firms should invest in consistent sustainability training across their teams. And I mean from, the most junior levels to your most seasoned financial advisors. That way, everyone's speaking the same language. And something we worked really hard to do at Bank of America, but making recommendations based on a shared understanding, labeling system, not just buzzwords. And like I said, it doesn't have to be overwhelming, but it's starting with, say, a foundational module and building from there. And, this is exactly what Maria's been recommending for some time now. But I just want to underscore that is having that shared language, that shared understanding and strategy can really take you so far. And it's just getting started, just taking the first step. And I'll just share a story to close out. But I built a training program at Novata. In my time as chief sustainability officer, we offered it to the entire company and was not mandatory, but it was strongly encouraged. And I had the engineers enrolled. I had members of the customer success team and sales team enrolled. And at the end of the course, and I did not pay him to say this, but one of the engineers said, everyone should take this. I mean, just having that shared understanding, shared language. How are we defining these different topics? Yes, it's a sustainability focused company that's selling a software product to the private markets. Make sure our team has a shared understanding. Like, what do we believe the big problems are out there? And how do we want to talk about this? And it was time well spent, So people were grateful that they took the time out of their day to get in alignment with their teammates.
Yeah. And that's really, I think that's a through line that's come back. This is our 25th episode, I think. And that's a through line that I can see through most of the people we talk to is it really gets down to building that culture within a firm to have, sustainability that's real. That's not going to be greenwashing. It's not just pushing products. It has to come through the culture. And you see that with whether it's an investment firm or a company itself. It really gets down to, is it embedded in the culture?
Fully agree.
Well, thanks, Lorraine. And thanks everyone for tuning in. This podcast is just one way ED4S supports sustainability education. So follow us on LinkedIn. You can bother all of us, including Lorraine there if you want, and ask us anything you wish. And if you're interested in ED4S, check us out at ed4s.org.
Yeah, and stay tuned for the white paper coming up.
That's right. Take care, everybody.
If today's episode sparked ideas for your team, visit ed4s.org. That's ed4s.org to explore our customizable corporate learning solutions or book a quick discovery call. You don't have to figure it out alone.